Imagine this. You're sipping your morning coffee, scrolling through the news, and boom! You read that budget 2025 could affect your savings, your pension, and even how much council tax you have to pay. Sounds dramatic, right? Well, it kind of is. Welcome back to Wise Investor Path, the channel that helps UK investors to grow their money smartly. And today we are covering Budget 2025 tax signals that could affect every single one of us. From pensions to ISAs, from landlord to inheritance tax, there is a lot on the table. So stick around because I'll also give you strategies to prepare ahead. Let's start with the big picture. The UK government is looking at a £50 billion black hole in its finances. Rising costs, sluggish growth and high gilt yields, which basically means that borrowing money is now more expensive and it is forcing the chancellor to look out for cash. So what happens when the government needs money? Yep, you guessed it right. They turn to taxes. That's why Budget 2025 is so important. They are not just some numbers in the parliament, but it could mean real changes into how much money you take home, how much you save, and how you invest. We will start this discussion covering all the areas that could get affected with Budget 2025. First up is pension tax relief. At the moment, the government is giving 40 to 45% discount to higher rate taxpayers when they invest into pensions. The budget 2025 could limit that to 25% for everyone. So if you are a basic rate taxpayer, that could mean a little win to you. But if you are a higher earner, it's a big loss. It will sting. That's like less free money from the government topping up your retirement savings. Imagine working your entire life, putting your money away, only to realize that the boost that you're expecting gets cut into half. That's why it matters a lot. Now let's talk about ISA, something very close to every UK investor's heart. The ISA allowance limit is frozen at £20,000. But the real twist is the government can cap even the cash ISA segment, thinking around £4,000 to £10,000. The government wants people to put more money into stocks and shares ISA because it is something that funds the businesses and the growth. It's like the government saying, stop hoarding your cash under the mattress and go have some fun at the stock market casino. Except that this casino has both winners and losers. So you will need to be smart. Third thing which could get affected is council tax, something really close to homeowners and renters. Council tax for the first time in decades can get revalued, which means that if you are living in a high value area, the council tax for your building might get increased. And if you are renting, don't celebrate too fast because the landlords often pass this cost down to the tenants. Also speaking of landlords, there is a talk of slapping national insurance on rental income. Right now this rental income dodges the national insurance. But with the treasury desperate for cash, this loophole could close. So if you try to understand, if you are a landlord who is already struggling with higher mortgage rates and regulations, this could really squeeze your yields, which may mean that many landlords will sell their home, thereby reducing the rental supply and driving the rents to go higher. So dear renters, you are not off the hook either. Next up is property tax, one of the most emotional of all taxes, because it is about what you leave behind for your family. The rumor is that the threshold and the relief could get tightened, especially around the property wealth. So if you are someone who are thinking that they are outside the inheritance tax, you may find that your estate getting dragged into the inheritance tax net. Probably not the legacy that you will want, right? Okay, enough of doom and gloom. Now let's talk about strategy. Because at Wise Investor Path, we don't just tell you about what's happening, but also how you can prepare for it and deal with it in the right way. First thing you should do is diversify your portfolio. If the cash segment of ISAs get capped, then you should invest that money into stocks and shares ISA to have a long-term growth. Second thing which you can do is front load your pension. If you are a higher rate earner who is getting a 40 to 45% relief from the government right now, then you should front load your pensions now itself, before the slab rate cut comes in. With respect to council tax, you should not get caught off guard. You should start preparing now, manage your finances, and have some buffer amount. If you are a landlord, I'll suggest you stress test your portfolio. Ask yourself, what if the yields drop? Is this deal still beneficial for you? And take a wise call. Because it's always better to plan now than panic later. For estate planning, review your wills and trust. A little forward planning now could save your future generations a lot of tax pain. So here's the bottom line. Budget 2025 tax signals that the government is looking for money. So every investor, saver, homeowner will be affected. But the point is not to panic and start preparing. So if you found this breakdown helpful, hit the like button, subscribe to Wise Investor Path and press the bell icon so you don't miss any further updates from our side. We make UK finance simple, practical and smart because your money deserves better. And if you want full written guide, I'll put the link to our website post in the description below. Go check it out. It's packed with further more information. This has been Wise Investor Path. Thanks for watching. Always remember that money does not grow on trees, but with right strategies, it can grow smarter. See you in the next video.